Good evening, ladies and gentlemen. In the interest of time, request all of you to please settle down as we commence today's evening. We would like to begin this evening on an auspicious note with the lighting of the lamp. I would like to invite Mr. Pramod Chaudhary, Bhuvan sir, Varsha ma'am, and Sidji. If you could do the honors, please. A huge round of applause. Thank you.
शुभं करोति कल्याणं आरोग्यं धन संपदा शत्रुबुद्धि विनाशाय दीपज्योतिर्नमस्ते। Good evening, everyone. I think they have not started the starters. Good evening and namaste, everyone. You all would have seen me in your emails or WhatsApp messages. But today, I would like to take this liberty to open this meeting, as this is not our regular investor meet or any product meeting. This is Client First Group's first ever shareholder meet. So, before we start our meeting, there's one point which I need to mention. After all the speeches, there will be a QR code, which will be displayed in the screen. You can scan it from your mobile, and there will be questions, which you can answer that, and 2 lucky people who will answer all the questions correctly, there will be surprise during the end of the session for them. So, but I can give you one hint for that. If you will listen all the speeches carefully, you would be able to answer all the questions correctly. And that will be after all the speeches. So before we take you through the journey of future, let me take you back in 2015, when it all started. 11 years back, we bootstrapped Client First Management Consultancy. We started as a broker, then emerged as a EM to private banks, then advisors to various asset management companies. Then 2019, it was a pivotal moment for us because we evolved ourselves as portfolio manager or portfolio advisor. And that time, Founders Portfolio was born. Currently, as we speak, Founders Portfolio is managing $100 million, and since inception, it has been compounded by 20% CAGR. And 2 years back, similar kind of meeting, we mentioned that, and we promised the moment Founders Portfolio will be managing $100 million, we will launch our India-based fund. But it gives me immense happiness to mention that in 2024 itself, well in advance, we launched Ananta India Growth Fund. And I'm so proud to mention that it has outperformed Nifty 50 dollar TRI by 30% within a year. So now there is a QR code for you, which you can scan. It will be like a fastest finger first for you. So there is a timer for that. Quickly scan it, and you can answer question 1 and question 2. There are multiple questions there, which you can answer later on, after Siddharth's and Bhuvan's speech. QR code not working? Done? Team, can someone see that? For anyone with so your time starts now. Is it done? So moving to the next speaker, he's very special to us, and he is no stranger for this audience. He has been one of the guiding lights from the beginning of Client First Capital, and he has been with us in all ups and downs. He has been crafted many startups and entrepreneurs. So without further ado, I would like to call Siddharth Razdan on stage.
Good evening, everybody. Am I audible? Thank you, Varsha, for the kind introduction. I have been instructed by my wife to start with a disclaimer. And like every obedient husband, I am doing so. The person in the photograph, which you have seen on your tables and also here, this photograph, I have been instructed to clarify that this has been created by merging 2 photographs. So I'm doing the needful. Now coming to the serious stuff, it gives me immense pleasure to welcome you all to the first shareholders meet. It's a kickoff meet, and it's a privilege and an honor to be addressing you as the first outside director of Client First. I do hope 1 or 2 of you in the audience will join me on the board very soon. That's my wish list, and I hope to engage with you in the years to come as a part of the long-term journey which we have embarked on. I would like to first share with you a very, very personal experience. And it has some context. I'll come to that a bit later. In the year 1988, my sister got married. And my father, who was a central banker, just disposed of a few of his shares to fund the marriage. Till then, thanks to Hindi movies, I believed that you broke FDs borrowed money from friends, relatives, sometimes sold some jewelry, sometimes maybe even real estate. It made me realize one simple fact. If you manage your wealth well, you can meet a lot of your needs and obligations in a very purposeful manner. My father didn't even bat an eyelid, and he was very, very comfortable. Which also made me realize that wealth management is a very serious affair, and provided we stick to disciplined long-term returns approach, we can actually create a lot of wealth. And this is the focus at Client First as well, to create and work towards long-term sustainable returns rather than speculative returns or chasing the latest trend. And this learning and this experience, which I experienced myself at a pretty young age, has been imbibed by me, and I'm taking the legacy forward in managing my own money as well and managing money for people, others as well, which Client First is doing. As Varsha has mentioned, I have known now Bhuvan for over a decade, and I have been a witness to the journey of Client First firsthand. I would like to share some perspective from my own experience of dealing with him. And most of you may be aware of a lot of things, but some of you may not be aware. He's a very avid sportsman. So he likes to focus on his sports with a lot of focus. It's very important for somebody managing money to be physically fit as well. For his mental fitness, he reads a lot. He reads a lot of books. And every time, I think in every annual meet previously, he has mentioned some or the other book. And he makes sure his team members also read those books. He is also very spiritually inclined, which is also very important. Physical and mental fitness is very important for a fund manager. And discipline as well. Sportsman teaches you sportsmanship. It teaches you an attitude to take losses and wins in your stride. And that is what Bhuvan is all about, for me. And to conclude, since this discussion is not about Bhuvan, I would like to state publicly that you are perhaps the best self-taught fund manager I have come across in my lifetime. And I would request everybody to give him a big round of applause for this. And I have seen a few in my life. Okay. So one of the biggest qualities he has is always curious, always willing to learn, admit mistakes, do course correction where required, which is a very big quality. Varsha mentioned the 20% return, and I would like to set a little bit of context there. Every fund manager, especially in the US equity space, in the last 6 years, has to have to contend with a lot of volatility. Volatility emerging from factors which could be foreseen, some could not be foreseen. Some of them having 2 US presidents, low interest rates, high interest rates, the AI tsunami, the Magnificent Seven boom, and 2 geopolitical conflicts and pandemic. So these returns of 20% CAGR for a 6-year period places us in probably the top 5% of people who manage US equities. While some of you may argue some of our peer group may be managing much larger sums, which is true. But I would like to reiterate that we are not complacent, we are not getting carried away, but it is a very meaningful performance and achievement. And again, I would like to congratulate the entire team headed by Bhuvan for this performance. Also bear in mind that it's a very small team. We haven't spent any real money on marketing, brand building, and we have grown thanks to the support of all investors, stakeholders, friends, and families. That's how we look at it. The Client First family and the extended family, who have always been with us, supporting us without fail. And we have tried to live up to their expectations as best as we can. Now coming to the topic, why are we here today? So after a lot of internal discussions, deliberations, debates, we at Client First have decided to go on a growth trajectory or on a path which will eventually lead to a NASDAQ listing in 5 years or so. And we are inviting all of you to be founding shareholders at a preferential valuation. I will not go into the details, Bhuvan will. So I will leave it to Bhuvan to go into the micros of it. I'll focus on the macros. I would like to clarify this is not a rash decision, this is not a bold decision, this is a necessary decision. As we believe size is beautiful in every business, more so in our business. And every organization comes at an inflection point where it has to move beyond its founders and institutionalize it and globalize it. And we believe we are ready for that responsibility today. And we are embracing it. We are inviting you to come on board to align interest. We believe we now have the performance, the AUM, the learnings, and most importantly, the internal accruals to embark on this journey. And we are seeking some small additional support from our investors, stakeholders, family, and friends to really take the company to the next level and achieve the goals we have set ourselves from. Now, let me address a very important question. Why do we need the money? We don't need the money for survival. We don't need the money for small growth. We need the money to move to the next level, which will mean investments in people, in technology, in branding, marketing, going to new geographies. Rest of the stuff, now Bhuvan will give you the full breakup. I don't want to get into that. Now the question also, which obvious question many of you may have, okay, why now? Let me answer this in a different way. We believe that uncertainty is a certainty in today's world. And when uncertainty is a certainty, it ceases to be uncertainty. We have embraced the volatility, the challenges which have been thrown to us. And the other question which comes to my mind, why not now? There is no perfect time. The time is now because we believe we are ready. And why do we believe we are ready? We had set ourselves 4 important benchmarks before we embarked on this journey. One was the $100 million AUM. Next was a 20% growth in returns, CAGR, which Barsha mentioned. The third was the launch of an alternative strategy, which is the India Fund, to the founders' portfolio. And the fourth most important factor, positive response, initial positive response from some of our stakeholders and shareholders, prospective shareholders. We reached out to few of you and we got very encouraging response. This gives us the confidence to approach the future with open arms and embrace and look at the challenges. There is always saying there is no good time and bad time. There are only good and bad people who embrace challenges, and we are ready for the challenge. And we are inviting you to be a part of our journey. One of the key guiding principles here is also to align our interest with our investors who have supported us in this journey. And we intend to we'll go into more details as we go forward today. The next question comes is, why me? Okay. I started my investing, first qualification is the white hair. I started my investing journey as a student in the year 1986, so I have seen a few cycles in my journey. What each cycle, boom, bust cycle, downtrends, uptrends have taught me that every boom, bust cycle, every uptrend and downtrend has its own learnings. While we should study the past, we should not get tied to the past. We have to look at a balanced view of the past, present, and the future to come to decision making. Living in the past or getting psyched by past experience is also not a good idea. But at the same time, it is not a good idea just to rely solely on the future. So we have to blend and balance, and that is what we are trying to do here today. I started my career by taking companies public. I just completed my term as a nominee director of a fund house which I'm associated with a listed company. So I do understand the listed space. Most importantly, why am I qualified? Because I have the curiosity of a 6-year-old, the energy and attitude of a 25-year-old, and 30 years of experience plus experience backing me. Now, coming to my role, I look at myself as a trustee of all stakeholders present and future, which includes employees, investors, present shareholders who will come in the round, future shareholders. And one of the key tasks I've set on myself is inviting other directors to get varied expertise and get inputs as well from them. My focus, I intend to be a very active board member, as I've been a board observer for a very long time. My focus is going to be on risk management. My focus is going to be on strategic thinking, strategic decision making, and of course, corporate governance, not in any particular order. Before I hand over the mic to Bhuvan to run you through the details, I would like to leave a thought with you. Till now, all of you have entrusted us with your personal wealth. Okay, we are in very interesting and challenging times, as we all know. We have an AI tsunami going on. We have a defense spending which is likely to hit an unprecedented ceiling everywhere in the world. We have mega trends. We have global supply chains, deglobalization happening at a rate which has never been seen before. We are even seeing depopulation. All the major G7 countries are seeing a downtrend in population, and many other mega trends. So today is a time, the first time ever, I would request and urge all of you who are business owners to also look at a prospective investment in Capital First, Client First, as a diversification play, where you can invest a portion of your business surpluses for a non-correlated returns, which can serve you in good time and bad times with a 4 to 5 year horizon. Thank you all for your attention. It has been a pleasure. I'm happy to interact with you one-to-one, as well as on the sides, and open to questions. And Bhuvan, now I'd like to invite you to cover the rest of our. Thank you.
Call the mic, eh? You have another quiz. Please continue till I get ready. When should I start? Kitna time? Good evening, everyone. I don't have habit of talking to walls, so I need responses. And you have been so good to us. I would like to hear it again. Good evening. I'll request all of you to loosen up. What do we do from here? How do we progress? That doesn't matter. What matters after my speech and everything is done, the music is going to be on. And I would like you to forget whether you're a client or a friend. We all, at the end of the day, are in a journey where there is no destination. So friends, I'm going to talk about the future, and that's why it's very important. Whatever I'm telling you here from now onwards is a forward-looking statement. So please be very, aware of the fact that whatever I'm going to say is absolutely a forward-looking statement, and it is not a recommendation of a security or a recommendation or advice to invest in our company. So you heard about macro from Siddharth. Siddharth, thank you. I think you are on perfect articulation in the macro, where I strongly believe that I know my 10 and 15 companies, and I'm very happy. And micro tells you about macro. If the stocks are down, you know what's happening in the macro. I think we all are aware of it. Every day we check the Gulf News or Khalid Times, and we exactly know which kind of uncertain time we are. Having said that, in the last 6 years, I think the 60 years have passed. Our parents sitting in India cannot tell that we don't have experience as they have. I think we have seen a lot in the, specifically in the last 3 months. So all I'm trying to tell you here is that why the fundraise? Siddharth gave his perspective. Buffett, after running the partnership for 11 years in 1969, he dissolved the partnership because he realized that if he has to become a conglomerate, he has to now manage permanent capital. I'm not dissolving it. I believe there are enough opportunity in the market, and there is no need to just close a fund. In fact, there are plenty of opportunity. We can launch more companies in a similar, let's say, with the method. But having said that, it is a time to go beyond Mauritius, go beyond Dubai, and explore similar companies, and using those companies as a tool, reach a profitability, and then probably get into NASDAQ. And this is another 10x which I want to achieve in my lifetime. As I think Siddharth has mentioned to me earlier, that if you talk about $1 trillion individual to you, roughly, let's say 5 years ago, you would have told, why, you're joking. But today we saw Elon Musk nearly becoming trillionaire. I will say, let's talk about some billionaires. Last decade, a lot of billionaires have been, we have seen. So we are just trying to aim $1 billion from here. We already, I think, people sitting here, I think close to $1 billion together or more than that. So I think we can do that also as a family. So we would like to follow the same path, as he rightly said, that companies should be free from me. I'm not going anywhere. I'm going to drive the show. But we also have to make space for many other people to come. One similarity with Buffett in 1969, his AUM was exactly $100 million. But he bought Berkshire Hathaway in 1965. So he was ahead of the curve. He's always ahead of the curve. And we still, the kind of fundraise we are doing, it is a very moderate risk approach, where we have this habit of building a business first, we make it profitable, and then we approach you. So this is a homegrown business. We'll talk about the numbers also. And after we have done it successfully, just to prepone or accelerate our growth, we are giving you the first right of refusal to investing in the group. Now, what we have done so far, we have built client-first management consultancy, which was a placeholder. The initial days of an insurance broker or an introducer to the private bank, where we raised a lot of money for ourselves and used that money to plow back into client-first capital, where we have achieved roughly 18x of net profitability in the last 6 years. And I'm more proud of the CAGR, and I think roughly 18% CAGR till the last year we have achieved. And now I think market is corrected to something around, we are there itself. The most important, we also have shown you how a subsidiary can be created with a similar principle. The Roar Capital Partner is 50% owned by us and 50% by our partner, Kane Majumdar from Ridgewood Advisors. It gives me a very good thing I want to tell you here is that in 18 months, we are able to achieve the operational profitability. So today I'm addressing you as a shareholder, so just keep that in mind. And it's a proposed shareholder meeting. The next meeting might be smaller because those who would like to be part of the business, and then it will continue. So these are the businesses which we have grown. We were managing $5 million in 2021, and the AUM itself has grown roughly 22x. So this is what we are offering. As Siddharth rightly said, we absolutely don't need the money. But I don't want to keep this all to me, and you keep coming to me and asking, should I invest in that business? Should I invest in that business? Because it's very difficult to evaluate a business who comes to you and they're just going IPO in 3 to 4 years. We thought, why not we do it ourselves? And this thought, he is nurturing in my mind for roughly 5 years. And I don't know how many of you know, but if you read my annual letter, I had done a fundraise roughly 6 years ago. And in fact, Sunilji sitting here, I gave a joke to him that I would have started business with you earlier if I would have given you a chance to invest in the business. But it is very common for all of you to invest in a business. It is very difficult for me also to get you inside the business. How will I repay you? In our generation, it's not common. Generation which came 10 years after us, for them it is very common. And finally, one day came in and we realized that yes, this is possible. We started reading the documents on NASDAQ, and we found that we are very close to doing this with all of your help. So I'm going to talk about that. Now, if you look at the highlights of the business, no single customer contribute 5% more than 5% of the revenue. We have zero debt, zero external funding in the last 11 years. We have a diversified revenue base. We also would like to tell you that it's a geographic agnostic business. So we can shut our office here and just go to India and operate from there. It's a hybrid business model. We have a very less labor-intensive business. It's a mind-space business. So one of the very quality business which is built to last. And you are responsible for our growth. People who are sitting here are referee of somebody. So thank you. I think before I proceed further, I would like to all Client First Capital team to big a round of applause for all of you who have been referring people day in, day out. Thank you so much. I think this has to be louder. It is for you. Thank you. So we also have planned to create an app and enroll you as an introducer. And those apps will give you a visibility of when you refer people, what happened, and we'll also be happy to share those revenues with you. So it's a complete model where you are a stakeholder, not just the customer. We have roughly 10 countries plus presence. Those presence are very small, but I strongly feel that if we can be in the 50 market, so this proof of concept, this method of, I call it a method of yoga, is tried and tested. Many of my friends have approached me from US. Now we have roughly 4 partners across the world. We have an advisory company in India which are promoting our product. So this model of Buffett, which we are trying to make it last in the Middle East, I think it's working. And it's working because you have trusted in our knowledge and our wisdom. So this is a model where I think it is going to work even in the next decade. Now, generally, when we invest in a business, we look at a return on equity or return on capital employed of 20% for the last 5 years. That's what we do in public space. We look at 15 to 20% of sales growth. If you look at since inception, Client First Group itself has delivered roughly 32.9% on the sales growth. It has done ROE of 41%. And as we are getting more wisdom, or I will say less fool, we are able to get into regulatory space where the moats are high and you can see the numbers yourself. For the last 3 years, the numbers are amazing. Having said that, in the long run, when the business will be bigger, it won't be possible to run these kind of numbers. Having said that, even if we do 20% to 25% of ROE with 20% of sales growth, that's an amazing number to have. So most of your or the portfolio company, whether in Dharohar or Client First, you will find that they're the similar range. So it's an exceptional quality business. I should not be promoting it, but who else will do it if I won't? So the numbers speak, and it's a non-cash business. In fact, I'm very proud to tell you one thing. I always ask you that when you invest in great businesses where the money comes first and then you deliver the product like Amazon, Apple, Google, fund management businesses are in the rank of those businesses. Now, from the strategical point of view, if you look at the moment we get regulated by DIFC, the valuation goes up again. With or without money, we are doing that in the next 6 months. Right now, Founders Portfolio is also, in the next 2 or 3 weeks, we'll have a fund for the Founders Portfolio, and then we will go full-fledged to DIFC. We have also demonstrated that how, I'm going to call each of my colleagues in the end to the stage, but how we have created this business at low cost. And I still think, and it's very close to my heart, that for Buffett it worked because he was in Omaha. I have to be in DIFC, I don't want to avoid it, but unless it's a low cost, how will we deliver value to you? So we cannot change this DNA ever. And if you read my annual letter, I talked about that I won't be able to change myself. I still wear 50 dirham watch, and I feel proud to tell you that. Now, we have consolidated the existing business into the holding company. The AI, I understand. You all know I'm an MBA finance, I believe. How many of you know I'm a computer engineer as well? Thank you. So AI is not foreign to me. I keep playing with the AI tools. It is just that I don't want to invest in an AI business for the sake of chasing the trend, which is not my style. But I'm going to use AI, and I'm using AI to make sure that we reduce the cost. And it's a hybrid model which is going to work. And as I told you that there is plenty of money sitting in the institutional money where the minimum check is $20 million. I think they look for a track record which we have. So we can make the AUM 10x from here through the institutional money. So there are plenty of opportunity for Client First Group to grow. Current fundraise is of $50 million. Most of the money will still be in the market, and slowly and gradually it will go to the right places. Now, why 50 million? And where it is going to be invested? It is going to be invested into talent, regulatory framework, and buying similar businesses. So imagine today, we are a Mauritius-based business. But if I do an equity swap with my partner in the US, who is advising $350 million, and let's say he's ready and he would like to have a permanent capital structure, within no time, we will be a US-based company. And that's exactly is happening in the bigger world, where you and I are going to the office and every day just seeing how can we make some money by sales and profit. The bigger games are happening there. So the moment you have 2 or 3 country presence, the re-rating happens. And most of this thing, I think you know, and it's happening. Now, why $50 million? So assume your $50 million is invested in the stock market. And at the 20% or 17%, it is going to generate, let's say, roughly $9 to $10 million. The remaining $100 million in the client first capital, assuming that Dharwar is still not profitable, is going to give $3 to $4 million. At $13 to $14 million profitability, NASDAQ welcomes you in the top tier. And I learned this from Aura Minerals, which I think many of you who are an investor knows. So once you have $13 million of aggregate profitability, you can start exploring how you can go public. I want to do it at $25 million. So once $50 million is raised, we identify the similar businesses which are profitable, they have high moat. We invest in those businesses, the profit flow back to the holding company, and at $25 million, we can look at $500 million to $1 billion valuation. Friends, nothing is going to change for me, but what is going to change me is to find the better Bhuvan Gupta inside me. And I think there are plenty of opportunity I have to create inside the business, as my children will be making somebody else a billionaire, which I don't want. And I also want your children to come forward and they can join us, because this will require a lot of talent. This is a small breakup where the money will be invested. So majority of the money is going to the similar high mode businesses. I love mortgage services business. I also love businesses which are on the, let's say, services side. I am also happy to acquire an advisory business, because we know how we can convert that into a fund management business and increase the profitability. So these businesses are a tricky bet. It's not easy. Nothing is going to happen on day one. It will take a year or two before you settle down and get these businesses on board. But once you, let's say, out of 10 businesses, you have 3 or 4 quality business, reaching a profitability of 20-25 million is not difficult. Just to give you a ballpark figure, last year profitability of the company was roughly $3.5 million. If we earn 3.5, you roughly earned 18 plus. So if that 100 comes inside, the $21 million is achieved, let's say, next year. And everything gets re-rated after that. So size does matter, as Siddharth said. Now this is a little bit of the quality which we have in the public market, the quality criteria. Similarly, on the private market also, we're going to find a high mode company. We are going to look at the profitable business roughly 10, 15 years in the horizon. And probably there are a lot of people who are the age of 55, 60, who would like to remain a silent shareholder, but they want the business to grow and they do not have a successor. We will be disciplined again on the allocation, and here there's an opportunity for you again. So let's say a business is worth roughly, example, a business here, if you look at the maximum allocation, if I have 50 million inside the holding company, not more than 5 million can go inside for a business which is worthy of 10 million. So if I have to acquire a $15 million business, and I need to get a controlling stake for my business, the opportunity will go to you to co-invest. Those who have invested into private equity space, if you know, the private equity fund manager gives you co-investing opportunity. So this is that kind of opportunity. I also welcome you all, if you believe that your business is a great business, and if we have that capital, we are very happy to look at it, and if that can create a synergy, because at the end of the day, I'm sure you agree that the joint family is far better than nuclear family. How many of you disagree? Okay, no hands, so I think joint family makes sense. Now, we have also identified the pain points. I think it is something very important. The big companies, how they onboard clients, how they do the research, how they enhance their customer service, marketing and branding. We're already using AI. I'm going to show it to you, but not to the extent which we should be. So some of the money will go here also, because this can help us to make us 10x. Now, why Elon Musk become a trillionaire, or he is going to become a trillionaire? What will happen when the FSD will be live? Now, I don't know how many of you have driven FSD in Tesla? Okay, very strange. So I was in the US in Silicon Valley, and my friend gave us his Tesla, which is fully supervised driving, not fully self-driven. So basically, you have to be on the driving seat. And we knew his intention because he told us that it's all happening. Waymo is anyway going on the road of Silicon Valley. Those who has Tesla, by the way, how many of you have Tesla? Okay, 4 people. Okay, so I might be giving a free publicity to Elon Musk, which he doesn't need. But the moment FSD comes, which can come anytime in Dubai, it's already, I think, running 4 months late. The whole paradigm of the way you look at driving will change. So we went to this cherry farm, 70 mile. I was sitting on the driving seat, 70 mile back. Varsha was sitting on the driving seat. And it was a better driver than us. So AI is going to have that impact. The technology, anyways, we know. So we sell a lot of investments are now coming from US, UK, and Africa. And the Zoom meetings help us. Similarly, when I'm just giving you a simile, the moment FSD is rolled over, $12 billion worth of operating cash flow will be added back to Tesla. I can give you in writing that each one of us sitting in Dubai, if at all they have Tesla, are going to use FSD. It is a game changer. So I'm very optimistic. There's one very important characteristics. I'm very skeptical, but yet optimistic. So this is what we are going to do as well when it comes to AI. What are we going to do with the finance mechanism of AI? Obviously, if we can build it, we'll build it. If something is already there, we'll buy it. We don't want to, because today it is very important that how fast you move. So if you look at Amazon, I don't know, I think everybody uses Amazon, but I have repeated this earlier also. Amazon model is not around the tech. So somebody asked Jeff, and Jeff said very simply that after 5 years, nobody will tell me that I want this iPhone, but Jeff, give me this iPhone a little more costly and give me after 2 days. We will require it now, and we will require it cheaper. And that principle, even when Andy Jassy became the CEO, did not change. So yesterday, at 10:30, we have a doorbell rang in the walkie-talkie in the security, and we thought nobody should be coming at this time, so we didn't open it. But after 20 minutes, we found somebody dropped the Amazon packet, and we are now using Amazon now, or let's say noon. So what I'm trying to say is that the great businesses are built around the speed, and at the same time, you have to deliver the quality. So those parameters is what an entrepreneur like me or a CEO like me has to see. Now, the elephant in the room, how you come to valuation. Mohan keeps telling me that everybody like to invest, but they keep asking about the valuation. Now, friends, if I ask you what is the valuation of your company, you will give it to third party to value. He is going to ask you each and every question as if you are going to tell him everything and he's just going to write it. And you can do valuation from you can follow the EV/beta model, you can do the comparative valuation, you can do the cash flow model, you can do the price to earning model. So I'm just showing you price to earning, and I will be giving you all kind of comparative because that third party, I'll say, for the sake of doing it, I'll do it. But just understand the valuation in a very simple manner. Last year, we had a base of roughly $50–60 million. We achieved roughly $3.4 million profitability. The track record of the sales and the profitability is at 25%. Our 60 million base after the market fall is still at $100 million today. So that base got double. So everything is compounding. Your wisdom is compounding. Those who have seen the earlier fall, they are loading the money in the next fall. And they are telling their friends, they're bringing their friends, because everybody today has a need to diversify and to have 10–15% of growth. And I'm sure before we come, the property comes, and all of us have 6–7% being made in the property. But you now want something better. Because these big companies, these hyperscalers are also taking away a lot of our business. And that is why the only way to either we encounter them and we face them, like some of the startups like Blinkit in India or urban companies started their own method, where the other method which we adopt is become their partner. So it's very important to understand that the valuation of this company is driven by a simple method is, if I have to get $4 million, which is I'm projecting a revenue for next year, in a US Treasury. US Treasury is right now, what is the interest rate? Anybody knows? 10-year interest rate? 4.51. So to make $4 million at 4.51, how much money you have to keep in the bank or invest in the US Treasury? 100 million. Thank you. So I give you a discount of 50%, and I give you Dharohar for free. So Dharohar Capital Partners is also available, because even that will become profitable. Make sure will become profitable with your help. So this is a simple valuation. We are not depressed. We will never come to you at discount. I'm not in hurry. The more difficulty you face to invest in us, because it will be illiquidity, I am also going to face the same difficulty, but I want to enjoy it. I have the ability to work with my wife, not easy by the way, but I enjoy it because you should listen to people. I'm happy I work with Siddharth, somebody who is elder to me, and he keeps crafting my vision, and it is not easy to change. But I think the adaptability is very important, and I'm willing to learn. And then I have my childhood friend Mohan, who is driving the Dharohar Capital Partners. And I think I have a lot of you. You're also my elder brothers. And I'm very happy that you have, with all of the let's say, the argument or the discussion which we have on one-to-one on all the products, you have crafted me. So in a way, whether you are 1% partner or not a partner, you are a limited partner with a badge on your chest. So all I want to do move from here to a shareholder structure, and this is going to be more profitable for you. And I will tell you one more thing. I know many of you have invested in a lot of other physical businesses. Here I give you somebody who has performed. The business is very solid, and he is willing to take it to the 10x to 100x from here. With your help, it will be faster. You know it is going to happen because you are going to make money in the portfolio anyways. If you're going to make the money in portfolio, we're going to make money. Now, institution will come and eat my share, and I don't want to go to them. Before I go to them, I want to make sure that I have strength and backing of you. So it's a wonderful company, available at a fair price. Now, enough from me. Let's hear from some of the clients here. So I'll start with Mr. Shivlani, who's, I think, couldn't join us. And then we have two more gentlemen to speak.
Hello, friends. Good evening. I am Bhagwan Fatumal Shivlani. Some of you may be knowing me from Dubai, but presently I am in Bombay. I have association with Bhuvan from 21 of a friend, and in 22 finally I gave him my money to start my position, and I increased it in 23 and 24, and 25 the result was phenomenal. Money had doubled, so I gave him more money in 26. When I started with him in 22, it was one of the lowest investments in my portfolio. And now it's the highest investment in my portfolio because of profits and because of the size it has come to. The point here is a very trustworthy and knowledgeable and fellow of principles. He tries to follow Warren Buffett's style of investing, and he has his own style. So I appreciate that, and I intend to give him more of my money to be managed. But presently we are going through some yo-yo investing company, and I recommend him to one and all. His ethics are clear. Father is in charge of some mandir, and when we meet we speak of Gita and other Upanishads and principles and characters of gods that we appreciate. So I hope and pray he will have $1 billion or more fund in a very short time, and we will be part of it. Thank you. Have a great evening. Thank you. Bye-bye.
Thank you, Mr. Shivlani. Now I have many of you who would like to speak. I would like to invite Dr. Hemant. Dr. Hemant, will you be speaking from the same place? Just few words. Utkarsh. And any one of you would like to speak after this? Rajesh, you there in the room? Yeah.
Hi everyone. I'm Dr. Hemant Kumar.
Hello.
I guess I know Bhuvan for last 18 years, almost 2 decades now. Whenever I'm thinking of this time, so I see that one reason, neither he's leaving me nor I'm leaving him. So in almost 2 decades, I've got wonderful experience of investing with Bhuvan. I've been investing before Client First. Initially, it was a learning experience for both of us, though I hold my PhD in finance. But whenever I have been meeting Bhuvan, he has always coming with something which has always surprised me, definitely enhanced the practical knowledge of investing. And I was reading today, he always talks about Warren Buffett, but ultimately Warren Buffett says that it is the test of temperament than intelligence, but Bhuvan has both. And as far as his new vision is concerned regarding his new company, I do not see any reason not participating in this, and definitely I would recommend his new vision, his new venture for all of us here. And it's really, I'm sure, because one thing, I've been teaching accounting and finance all my life, but once I taught business values and ethics, and it changed my life. So one thing what I have always observed about Bhuvan, that is always ethical about his advices. And I always, last time in my meeting with him, I told him that neither we should be investing in the companies which are not having ethical business practices. So we should always be having our own company which should also be working ethically. So Bhuvan, I wish you all the best and give my strong recommendation for your new venture. Thank you.
Thank you. Big round of applause. Pramodji, you like to take a minute? Anybody else who is with us for last 10 years? Rajesh bhai, yeah, please.
So first of all, Bhuvan, congratulations for the growth so far. 2 or 3 key points that I wanted to bring about. One was to run a business of this nature, you need to have a good team, which you certainly have. You talked about running it in a very agile, cost-efficient manner, but that comes with an efficient team that backs you. So congratulations on having a strong team.
Thank you.
The second thing that I wanted to point out was dealing with somebody else's money requires you to have a lot of patience to answer a lot of questions about the investments, about the decisions, about the performances of the companies that you've invested in. And what I've observed personally is you spend that time with your investors. The questions might be as silly as they could be, but you spend that time in assessing the question, explaining it, and giving peace to the person who's working with you. Thank you so much, and I look forward to be associated with this.
Thank you, Rajesh. Thank you. Thank you. A big round of applause for Rajesh. So Rajesh is, I think, invested in a lot of the startups. So we discuss a lot, and he's with Accenture now, right, Rajesh bhai?
Exaware.
Exaware. I get confusing. Sorry about that. So all I'm saying is, you have some of the veterans in the room who choose not to speak on the stage or from the podium, but you can talk to them. And everything is open in this open about us. And coming to the ethics, I think 2 things you need. And I have done many partnerships, small partnerships. I've found people ethical. I've found people greedy. But you need 2 things. You need to be ethical, and at the same time, you need to be hungry. And these 2 things, I think a lot of you also have, and that's why you are here. So ethics and hunger both is alive, and it is going to be alive forever. Now, moving on, now what is in it for you? Now, till now, you have been investing in the fund, which you will continue to do as you like. So let's say we make you 20%, you keep 16 to 17%, we take 3 to 4%. But now that track record which you have built, you are getting to invest in that also. So that performance fee, after giving a very small share to me as a CIO, is going to send back to the holding company, and in a manner it goes back to the shareholders, which is you. A very good thing which is possible, where the exposure to the AI and developed markets. So those today who have business across the world are doing great. Those who have business locally, you know what's the situation you're facing. Now with us and with the co-investment probably in the future, you will have an exposure to the AI and developed world. I think Girishji called me 2 days ago and he said, US mein to invest, we have to do investment in the US because everything in the US is thriving, because that country by innovation or by its, let's say, distance from this place, or from the geographical point of view also, they have a lot of land, they have a lot of water, they have a lot of resources. That company is going to thrive. The culture is such. I have been reading books. Even a New Zealander person, there's a company called Rocket Lab. So if you know about SpaceX, the 3rd number in the space is Rocket Lab. So Rocket Lab's founder who started his journey from New Zealand, and he has no education, no formal education. He also has been forced to come back to Silicon Valley because they give the money. That culture will not change overnight. China is doing absolutely great and absolutely amazing, but US culture is not going to change. So they bet on the ideas, and that is why they're still leading the show. Now, yes, this significant listing gain for those who would like to, let's say, exit in the round 2 or exit in the IPO, for me, this is just a journey. Now, just to give you an example in a nutshell, so let's say at 50 million pre-money valuation, you invest $1 million, we raise 50 million, and the round gets closed at 100 million. So you precisely has 1% equity in the business. That 1% in the business growing at roughly 15 to 20% for the next 5 years, based on the multiple what market offers, it can become 6 million to 12 million. And that is what I see. I don't want to give you a big number or a higher price to earning ratios, but this is something what I believe I can see. What happens when you go public, it's also a biggest marketing event. Because right now, only 11 country people, some people know us. The moment you have a stock ticker, the moment you are global, a listing company has its reputation. And then you have the money, you have the muscle power to move within these companies, and $1 billion is a small fund management, if you ask me. What am I placing on the table? I don't know how many of you know, but I've been drawing less than $100,000 salary for the last 11 years. Varsha and I am going to freeze our salary there. Buffett did the same thing. And we will be getting a very small carry, and the rest will go to the shareholders. 80% of our net worth is already there, and it will be invested in the fund. Now, why should you invest in Client First Holding, and how it is different from the funds which we have like FP and Ananta India Fund? If you want cash return yield, which Siddharth rightly says, if you want the yield, come to the fund. If you want the growth or legacy for your children to own a business, come to the holding company. If you want both, please invest in both and have the liquidity at the same time. Also have a 5 to 6 year of horizon to get your money compounded through us. Some comparables. So there are two types of holding company. One are passive holding company, which only handles the cash. And there are other holding companies where the management is absolutely brutal, absolutely on the mark. They would like to increase the profitability of the group companies. And one of the company where here is Lifco from Sweden, which is running at a price to earning multiple of 38. They have 3 divisions and they have plenty of subsidiaries. So there are a lot of businesses available in the world. We have to choose the right one. We have to commit the right capital. We have to be patient. The advantage we have beyond private equity is that we want to become permanent capital owners. One more experience I would like to share. Money is plenty. Getting a right promoter, getting a right CEO to drive the show, and I think you know it better than anybody else, is the key. So Buffett said, we will give you the money, but please bring your own people, we can't offer. So finding that right person to drive the business is the key. Now the next step, discuss with us more, commit your capital, join our sessions where you want to have more details. We also don't have much detail. What we have is the picture that we have done it. By the way, all these books which you saw about Client First Capital and how the books are so great, we kept doing it. We never looked at numbers. We believe in low cost, believe in delivering the quality and growth, and we continue to do it. And where we understood that this is going to work, we did it. And later on, we created the accounts. And when we look at the numbers were fantastic. So our approach is very simple. I go to office for 2 things, and I tell each my employee, just go for 2 things after the compliance. The first is to make some money. And the second, if you can't make money, save some money. Even my accountant, I want to be a profit center. With that intention, we go to office every day. We believe in doing the difficult thing. This is again a difficult thing. It's a 10x. And as rightly said by Dan Sullivan, 10x is easier than 2x. I strongly believe that for 10x, there's 1 or 2 paths. 2x, there's a lot of noise and people get deviated. 2x is like increasing my salary by 15%. 10x is like growing my wealth by, let's say, 10x or let's say 10 multiples. So 10x, in my opinion, is very easy as compared to 2x. The milestones, as you see, we will be closing the round at the earliest. We'll go to DIFC. And then we'll explore. And I'm sure when we go to DIFC, we'll attract those kind of talents. I'm short on time, so you have the first right of refusal. That is what I want to highlight here. Institutions are ready to invest, but I think we promised you. And that is why we are here to tell you before we go to institutions. Now, people you see on the stage, it's AI generated, by the way. People you see on the stage, they have committed to be with us and would like to be there when the IPO comes. And I want to go with my 25, 30 key investors so that we all feel what is like listing in NASDAQ. And I think it is not a big thing. It's only here. And it's, again, I'm telling you, for many of you who believe in permanent capital, this is going to be a journey again. The book, the rule book which we are following, as Siddharth talked about the books, Brad Jacobs, who wrote 2 books, he took 3 companies public. Each of them are $10 billion. So he wrote the first book, How to Make a Few $1 billion. Then he took it public, and then he again wrote a book when he has got 3 companies public at each of $10 billion. And then he said, let's make few more $1 billion. So we're following that rule book, and brilliant book, how you can compound your profitability and then have this 20x leverage which NASDAQ or which any index market gives. So, Rohit, we're open to question and answer. We can take roughly, Rohit, how many questions we can take? 5. Siddharth, I welcome you on the stage. If you have questions, I'm done with my speech and I would be happy to answer any questions. Even if you have question on the market, feel free to ask. Utkarsh, please take the mic around. Great, we have no questions.
I hope everybody has checkbooks then.
Today is the time of wire transfer.
Today is a weekend, so.
Yeah. Yes. So a question is coming from the oil industry straight to us.
Not really from oil industry, Bhuvan, but when you are talking about taking a controlling stake, are you going to get bogged down by really running the company?
No. So, as I rightly told you, that the most important thing is who is running the business. So, we're not going to just buy the company and run it, because the most difficult part is to run it. For example, in Dharwar Capital Partners, I'm only involved in the management level. I'm not doing day-to-day operation. So mine is very clear that my calendar has to be empty. We will never do that. We're very clear with it.
But you understand the pitfalls, right? If you have a significant stake in a company and if that company is not doing well, you will always be tempted to say, okay, whole of this management team is not performing well and now I need to step in and make it work because you have put your hard money into that. So
yeah.
you understand that you might really get bogged down by running some of these businesses at some point in time.
Yeah, so I got your point, and it's a very good point. Turnarounds are seldom turnarounds. With my past mistakes, what I learned, that don't get involved in a turnaround. Because if you are getting involved in a turnaround, you need to do a lot of day-to-day headhunting, and I'm not interested in that. So what we're going to do is, we're going to buy businesses which are high moat, profitable, and are run by the credible promoters and the CEOs. I'm not going to get involved. So let's say the business has some problems, for example. And in that case, we will be hiring somebody from outside. We will be, like Solomon Brothers example of Buffett, he got involved to clean up, but he did not get involved to handle it. And we'll have enough money, Deepak Bhaiya, because we will not be committing 30-40% of our the asset in the client first to that company. So we'll have a muscle power to handle it. Does you want to take it?
I will just add 1 or 2 points. So whenever we are taking a majority position, it will be after a fair degree of due diligence, spending time in understanding the person behind the business. And as Bhuvan has already pointed out, we will only take these positions when we are equipped, we have all the ingredients, all the manpower, all the monitoring systems in place to take such a position. So it is not going to be a rule book that we are going to take majority positions that easily. It will be done very, very selectively. We are very conscious of the fact that when we are taking a majority position, we are lending our name and credibility, and we will only use it with a lot of discretion. It is not the base case.
So I think the clarity we need, that why do we want to take a majority stake? Because unless you take the majority stake, as per the rule book of accounting, you cannot add that profit back to your holding profit. That's why you need the majority stake. I hope I'm clear. Yeah.
Bhuvanji,
Sir.
there must be other people before you who have traversed the same path. So how has their performance been and how has their journey been?
So there are many, sir, and Constellation, Topicus, Lumine, and they have done in different places. And I think if you go meet an investment banker, this keeps happening every day. Buffett is one example. Then he's been followed by Prem Vatsa, which I have not mentioned here. You have Leonard Mark, who has 1, 2, 3 holding companies. Each one of them have 700 plus or 50 plus businesses, and they all choose which particular domain they master. So we under asset management business. We understand advisory business. I don't understand building material. I don't understand 3-month, 6-month credit. Textile market I can't handle. So I will be only going around my circle of competence. That mistake I'm not going to do. I hope I answered it. This is very common. This is happening in in fact, UK is a place where this is day in, day out affair. Anything else? I think it is something very new for all of you. Yeah, Mr. Ajit here.
So will you be the only person judging the businesses to be acquired, or you are having a board or experts that you are going to hire, depending on the size of business or the nature of business? I mean, or what kind of advisory or board will be there to take a call on that? Thank you.
I'll give you a very simple example, sir. So Buffett bought a company and they had roughly 200 plus analysts or let's say advisors. The moment they've taken that company onboarded, he fired everyone. Investing is not a team sport. I listen to a lot of people, but at the end of the day, I follow the checklist. Now 6 years here and before, I think the number of mistakes you saw, and believe me, this is not a game of intelligence alone. It's a game of understanding that whole dynamics of that business, the ethics. By the way, culture is the most important thing for a business to survive. There's a saying that culture eats strategy over breakfast. So decision will be mine. There could be people I can take help from. Siddharth is one. There will be industry expert. So even today when I buy a public equity, a significant time goes to discuss with people who are industry expert. It is just that probably they are not aware of the financial aspect of the business. So we keep taking that advice, but we don't formally indict somebody in the board for this purpose. So we're not running it as a private equity. That is very clear.
Okay, thanks.
Thanks. Yeah.
Yeah, hello, Bhuvanji. Wanted to understand, is this kind of concept similar to what TPG does or something like SoftBank does, like it comes in the media that they have invested in the first round, second round, third round, or they kind of invest some millions or round. You understood what I'm trying to say?
Yeah, I totally understand.
Is it on the similar lines or this is something different?
So Siddharth, you should be able to answer it because I don't know this company's name.
We are very, very different from them. So let me clarify a few things so that all of us get a little more context. What we are trying to do is largely replicate the founder's portfolio. The basic guiding principles will remain same. Okay. But the time horizon and the liquidity is very different. Basically what we are doing or planning to do in the holding company, reinvest our profits, returns, which includes you, to get long-term growth in over a 3x, 5x period. So the names which you have mentioned are simple private equity funds. They collect money from investors. They work like any other fund, which includes the founders fund. Here we are trying to, because we want more flexibility, because obviously when we run a founders portfolio from a regulatory perspective, from a liquidity perspective, we are sometimes forced to take decisions which may not be optimum in the short to medium term. We get the flexibility to take a slightly longer term view, and that is why we are coming into it. But the core philosophy is going to remain same. And I would just like to add to Bhuvan, when he meant controlling stakes, we're talking about incubating similar asset managers largely. We're not talking about taking majority stakes in operating businesses which we don't understand at all. So the idea is just like the rover is one example. There could be 10 other rovers. The idea is to diversify, partner with entrepreneurs who have achieved some amount of success. We are partnering, we are trying to create the next 4 or 5 Bhuvan Guptas, or probably even better than him, to diversify the whole risk management system, also grow on scale across asset classes, across businesses and across geographies. So the way we select the business will be slightly different, but structurally, fundamentally, we are trying to look at long-term growth. So the difference will be something like this. You will get 10 or 20% CAGR in the holdco. That's the idea, compared to what 20% you get. So here we are targeting 30 to 40% return, but your IRR will, or the returns will come in the 3rd to 5th year or maybe the 6th year at one go. That's the value unlocking. So we have sufficient time to let the companies perform to a level. Now, what can I do in a listed company? If I underperform, I have to exit. Here I have some more control, more visibility, engagement, possibility, take bigger stakes if needed, and influence to some extent the outcome. So I have little more flexibility in achieving the desired objectives, and that is why we are finally setting it up. More importantly, again and again I'm repeating, it is an alignment of interest. If we all come together, nothing much changes. We are all aligned on the same side of the table. We are essentially changing the carry structure. In the fund, we get a carry or a performance fee. Here we are partner in profits, and we are trying to scale it to a level where you will be able to encash the performance and the track record. Today, the performance and the track record lies with the fund manager. Today, it will also belong to you where you can monetize it. Today, when I perform well, I get a performance fee. Can I monetize it elsewhere? Go look at other options? Yes. But since you've supported us, we believe you have the moral, legal authority, also I would use the word, a strong word, to partner with us and scale it up to a level where all we are proud that we did something worthwhile, something which creates history. The idea here is to create history for that, young team which had the ability to dream, has achieved something in a very decent period of time. We are not trying to be reckless here. We are not trying to be fast here. Core philosophy remains long-term steady returns. Just the pattern of investing, the time period of investing will be a little different. DNA remains same. No speculative, no trying to take a punt, no trying to do trend catching. That all is not going to change. And that is where the board comes in. So the board is meant to ensure that the corporate governance, the risk management systems and other strategies which we adopt, key hires, geographies, remains within a certain framework. So there is a supervision of there, you don't get carried away. Okay, so that is the role of the board. It will not interfere in the day-to-day decisions because decision-making in any business, listed, unlisted, has to be dynamic. And the person who is handling it, they have to do their job good. Yeah, if they want support or inputs, obviously the board will give it. Yeah. It is a recommendatory in nature. That's not the basic idea because, as he said, only one person can drive a car, finally, and he is accountable for the results. If there are too many people, we will just have a committee. It's like a camel. No, designed by a horse. That's how I would call a committee. Nobody is accountable, nobody is responsible. We don't want to follow that. We are a founder-first organization. The asset management business, if you see globally, all the leaders, some of the names which you have mentioned, TPG, SoftBank, they are only known by their founders. Be it BlackRock, be it any large name KKR, the founders are still in charge because that's the nature of the beast. While you have operations in 60 countries, 100 countries, you're managing probably $500 billion, some are managing very large, BlackRock is managing, but the founders are still there. They drive the soul and the engine, and that is what the DNA we are aiming to replicate. This business is a person's and the people's business, a judgment business, where the founders are best suited to run the business as long as they can.
So, thank you, Siddharth. Okay.
Sorry, we are seeing a change in logo. Tell us more about it.
So, see, sir, what happens earlier, you have been coming to founders portfolio event, which event is already done. So basically, you know amoeba, right? Amoeba gets multiplied. This amoeba, small amoeba is getting multiplied. So Varsha chose to speak. I don't know why she chose to speak after 10 years, probably seeing a lot of metal. He chose to come. He was actually there for last 10 years. So all I can say is that you're seeing companies within company. And I told you, as I grow, I need more people inside. Like Rohit might be running some company inside. And I tell all my employees that each one of you is CEO of a subsidiary. If you can't become, somebody else definitely will come. So as we discuss here, a lot of discussions are happening. I can't talk about them. The new hiring, the strategic alliances, the licenses probably in the developed world, all that is going on. You know we are very cost conscious, we go slow, but when we go, we all in. So I would like to tell you that they want me to stop, but we are available for questions off stage. Ganesh, if you allow me.
I have one final question from Ganesh. Looking at the confidence of Mr. Siddharth as a new director from outside the board and Mr. Bhuvan, I feel happy and confident. But actually what I know about is, I know you invested in IBKR, we get some returns and we are happy about it. I don't know you're talking about NASDAQ listing and what is the long-term 3x, 5 years, 10x, what is the DIFC? What is it really in a layman's language? Let me know what are you planning to do in a simple term and what is it in me, what is the investment you are looking and what is, I couldn't understand anything what you showed me actually, it is above my head. So I just want a very simple explanation on what you plan on this.
So Ganesh,
we must applaud it.
Till now you were welcome to my office, now you are welcome to my house. That's the answer. Thank you so much. I'm available. We are both available off stage. I think time is running. You have another quiz. Please scan if you like to. Rohit, what is to be next? I have to hand over.
I would just put it slightly differently. You are investors, now you become shareholders along with us. So we create wealth together in a more meaningful way on a scale which has not been done before. So here we share returns. Here we partner with each other, not only share returns, but also share the value we create. So the business we do create some value. Till now, you're not party to that value. You only get your returns for the money you invested. Now you are getting the returns indirectly and the value both put together. So any business when we do well, obviously if you are making returns, we are doing well, which we have shown you already. So now you are also a party and a stakeholder and a shareholder in those returns and performance, which also has an external value. Right now we are just splitting returns between each of us based on a pre-agreed ratio. That's the major change. Happy to discuss it more, anybody.
I'm happy you have curiosity, but in the event of time, I know it's a new thing. When we got Founders Portfolio for you, a performance-based fee model was new. And this is again new. But I'll tell you that you can never have full clarity, but we're available. We're going to come to you and we'll talk to you for the next 3 hours and it is nothing happening overnight. So excuse us and let me call Preeti because it's time to recognize the employees who have contributed. All of them contributed, but it is always great to have some of the achievers on the stage. So Preeti, please come on stage. Would like to welcome you. Bigger round of applause. It is time for recognition and reward. Should I go? Should I go here?
Yeah, you can leave.
Okay,
Thank you, Bhuvan. So now it's time for the award ceremony. Since we are so excited to raise the fund, we also know that none of this would have been possible without the support of our team. We are here to celebrate our employees' hard work and dedication. We have 3 categories of award, and this goes to our well-deserved 3 employees. So the first category is Service Excellence Award. And this award goes to somebody whom we always rely upon, who is accountable and trustable in her job. So the award goes to Varsha Purswani. Ladies and gentlemen, please have a big round of applause. She is our remote employee, so she can't be here to take the award. However, she does have few words to say in her honor.
Hello, good evening, everyone. I truly feel grateful and honored to receive this award. I would like to thank my management, my team members, and of course, my loving family for their continuous support, trust, and encouragement throughout this journey. This award means a lot to me and it motivates me to continue give my best. Thank you for believing in me. Thank you.
Thank you, Varsha. We know that you are watching from YouTube Live. We just want you to know that you are not just our employee, you are our biggest asset in the team. We are so happy to have you. Next category is Best Momentum Award. And to present this award, I would like to invite our founders, Mr. Bhuvan Gupta and Mrs. Varsha Gupta. Please come on stage. Yeah, ladies always first. So the next award winner is someone who is always our go-to person. Ladies and gentlemen, please give a big round of applause for Richa Kanabar. Congratulations, Richa. We are so happy to have you in our team. Congratulations. So our next category is Employee of the Year. And this award winner is somebody whom we almost everybody know in the room, who is with us for more than 6 years and always reliable and trustable. So winner is none other than Rohit Suresh. Congratulations, Rohit. Rohit, please stay and bless us with few words. Rohit, you have to say few words.
Not to hijack this event, I would like to dedicate this award to my grandmother, who has been battling for her life for the past 1 month. So, thank you so much.
Rohit and Richa, please come on the stage for group photo. Congratulations, winners. You were well-deserved employees. That's it for the award ceremony. Now I would like to invite Mohan and Mani for a vote of thanks.
So, ladies and gentlemen, as the saying goes, you were not ready for this. So, first of all, as we move to the musical evening, I have just one small announcement to make. The winners of the QR code that was flashing here, and the first one is Mr. Vashu, VASHU. It's the ID that is there. So, I don't know where it is. I think he's coming over. No, he's not. So, Mr. Vashu, VASHU is the ID. Okay, the second name was ET. Now again, I don't know, but this is the ID that we got. Yeah, please. Thank you so much. Do we have Mr. Vashu, VASHU? No? Then we'll move ahead. We will hand it over in person. So thank you so much, Bhuvan and Varsha. Yeah. So as we move to the close of the evening, and I would take some time to express my heartfelt gratitude to the people who matter the most. First of all, Varsha, to take us through the journey of the Client First Capital, how we started as a management consultancy, moved into the founder's portfolio, and I especially like the good things she said about the Dharovar Capital Partners, and then in the current way of Client First Holding. My sincere thanks to Siddharth also. Siddharth has been the guiding light. He has shown us the path. He has been communicating the vision with us, and he has ensured that we continue to traverse on the path. You have to produce many more golden melodies, Bhuvan. Yeah, and as the saying goes, Mr. Dhirubhai Ambani, who is synonymous with the equity cult in India, he had once said that the growth is life. And we are on this growth path, this journey. We have a dream to ring the bell at NASDAQ, and I hope that at least 25 of you will go us together with us. So great applause for you in advance. Someone once said that मंजिलें उन्हीं को मिलती हैं जिनके सपनों में जान होती है, हौसलों से सब कुछ मिलता है और उन्हीं से उड़ान होती है. Thank you so much for coming over here. I will not stand between you and the musical evening. We have a Baitak by Malhar. The bar is also open. Please join us. Enjoy your evening. Thank you so much for coming here. Thank you so much, sir.
People think that the banks are robbing them actually because their value of the currency is going down.
In the mining industry, you don't choose. You have to go where the resource is.
In the tech industry, we have seen 100x, 1000x, and 2000x. In the mining industry, do you think 100x can be made?
You can apply this to every kind of industry.
How to become rich?
If I'm happy, I'm rich. And the logic is very simple. They probably buy it for the neighbor. They want to impress people around that they have it.
Fourthly, I would say the deep appreciation of the idea of compounding.
So can I say that 20 years before, you had no idea that you will end up?
That's it. That's something like that.
Everyone earns money, but is your money working for you? Market noise, endless opinions, quick tips, yet real wealth remains out of reach. At Client First Capital, we focus on one thing: long-term wealth creation. This isn't about getting rich overnight. It's about growing wealth the right way. We understand your goals, your risk, and build a disciplined investment strategy around it. We don't just advise, we invest alongside you because your growth is our success. Client First Capital. Your trust, our asset. Start your wealth journey today.